Good afternoon, everyone that's on the call today. This is our Natural Resource Fair webinar. Today we will be sharing information by the Farm Service Agency. And before I begin, I'd like to provide an introduction to our organization. We are the Arizona Native American Producer Success Project number 7. It is a collaborative effort between developing innovations in Navajo education, the New Mexico Cooperative Extension Service, and the Diné College Land Grant Office. The project is funded by USDA Office of Partnership and Public Engagement, Outreach and Assistance for Socially Disadvantaged and Veteran Farmers and Ranchers program. The goal of the Arizona NAP 7 project is to increase the profitability and long-term sustainability of Navajo farmers and ranchers. To achieve this goal, activities in 4 key areas are being undertaken: to improve Navajo farm and ranch operations, to increase Navajo rancher and farmer knowledge of and access to available programs and technical assistance provided by the United States Department of Agriculture, the Bureau of Indian Affairs, the Navajo Nation, the New Mexico Cooperative Extension Service, the Diné College Land Grant Office, and others. Facilitating Navajo farmer ranchers' use of USDA Natural Resource Conservation Service, Farm Service Agency, and Risk Management Agency programs. To also strengthen the organization capacity of the Navajo Farmer and Ranchers Congress to address the current and future needs of Navajo farmers and ranchers. We are available, our contact information. I'm Sadie Lister, the field coordinator. You may reach me at 928-637-5633. And then Sharon Sandman is the assistant coordinator. Her cell number is 505-427-4262. We do have 2 other colleagues who work for New Mexico under the Native American Producers Success Project, Jesse Jim and Jana Johnson. Microloans with Farm Service Agency, our presenter will be Harriet Mann. She's the Senior Farm Loan Officer.
Okay, this is the Farm Service Agency, and today I'll be talking to you about the microloan program. Farm Service Agency administers different types of program, and one of them is the microloan program, which I'll be presenting today. And Farm Service Agency is an agency within the United States Department of Agriculture, USDA. FSA farm loan programs can provide credit to agricultural producers who are unable to obtain private commercial credit. FSA places special emphasis on providing loans to beginning, minority, and women farmers and ranchers. Farm ownership, operating, and conservation loans are available under the Guarantee Loan Program. Farm ownership, operating, emergency, and conservation loans are available under the Direct Loan Program. FSA offers 2 types of land grant guarantee program. There's 2 types of loan. There's 2 categories. One is called the Guarantee Loan Program. That Guarantee Loan Program is basically for farmers and ranchers that are the maximum limit of FSA loan is $600,000. So if they're wanting to loan more than $600,000, then they can do a guarantee loan. And a guarantee loan, we have several ag lenders that do our ag lending for us for guarantee loans. And the maximum limit on that is $1.7 million. Okay. And then the other program is the Farm Loan Program, which is directly, we service our customers, our farm loan customers, and the maximum loan limit on that is $600,000. Okay, and these are the different types of programs that we have, different types of farm loan program. Direct farm ownership with a maximum limit of $600,000. Sorry about that. And the term up to 40 years, interest rate are fixed. Interest rate at this time is for the farm ownership loan is 2.375%. And then also there's a down payment program, which is the lowest of the following: 45% of the farm ranch purchase price, or 45% of the appraised value, not to exceed the $600,000. The interest rate is of course fixed and is termed for 20 years. And then the direct operating loan maximum limit is $400,000, 1 to 7 years with a fixed interest rate. And then the emergency loan which is the lowest of the following: 100% of actual physical loss, and the maximum limit on that is $500,000. The term is 1 to 7 years, possibly up to 20 years for non-real estate purposes. Up to 40 years for physical loss on real estate interest rates. Interest rates are fixed. All FSA's interest rates are fixed. And then there's the guaranteed operating maximum loan amount is adjusted annually for inflation. And those are termed 1 to 7 years. Interest rate is negotiated by you and the lender. These are all the guarantee loans that I'm talking about right now. And then also the guaranteed conservation. The maximum loan amount is adjusted annually for inflation. And the term is 20 years. Interest rate is negotiated by you and the lender. Then next is the land contract guarantee. The maximum purchase price of $500,000 on a new land contract. And the term contract payments must be amortized for a minimum of 20 years with equal payments during the term of the guarantee. The guarantee period is 10 years. And then also we have the youth loan program. The maximum amount is $5,000, term up to 1 to 7 years, interest rate on that is fixed. And Farm Service Agency developed a microloan program actually back in 2014. And these programs is to better serve the unique financial operating needs of the beginning, niche, and the smallest of family farm operations. Example might include direct marketing to restaurants and grocery stores, organic production, community-supported agricultural, and farmers market. Fulfilling a need, assisting applicants who have limited experience by providing them with an opportunity to gain farm experience, management experience while working with a mentor. Usually the microloan is the, well, let me put it this way. Most of our loan programs that we administer, you must have experience in farming and ranching. That's one of the eligibility requirements to get a loan. But with the microloan program, that is, you really don't have to have the experience with the first production cycle. You could have a mentor on hand to help you through the first production cycle, and then the second production cycle, you're on your own. And next is eliminate use of high-cost personal loans and high-interest rate credit cards, and providing a bridge for youth loan borrowers to transit to a larger scale operation. We have some youth lenders that participate in our youth loan program, and they gain the experience, the knowledge, and as far as bookkeeping and how to handle livestock and all that, they gain the experience. So once they reach the age of an adult and they want to come into our office and get a loan, it's pretty much easy for them because they already have the experience, and we don't have to, ask for additional information as far as experience is concerned. And then next is assisting the agricultural community by creating opportunities to start new businesses. And microloans are direct farm operating loans, either annual or term, that do not exceed $50,000. Microloans have a simplified application process and paperwork and verification requirements that are more proportional to small loans and operations. The microloan program is basically for small operators that want to start a farm or ranch business. And the interest rate right now is pretty low. The interest rate is 2 3/8%. And the term is 1 to 7 years. And like I mentioned earlier, there's different types of loans that we have. And different types of loans have different eligibility requirements. Some examples of these are being the operator of a farm, having sufficient managerial ability, be able to obtain credit elsewhere, but have an acceptable credit history and use, and are a U.S. citizen, non-national, or qualified alien. For this information, if you need more information on general and loan-specific eligibility, visit our website at www.fsa.usda.gov or see your local FSA officer. One of the main eligibility requirements is to have a permit. A permit is to run livestock or run a farm operation. Usually, when we say permit is referring to a grazing permit or a land use permit, we call it. So if you don't have any of those two, or either, you're not eligible for the farm loan program. And then managerial ability and alternatives. And this talks about experience. Applicants not meeting the general requirement for farm management and experience can still be eligible. Alternatives include an apprentice relationship, past participation with organizations such as FSA, 4-H Beginning Farmer Program, and community-based organization. It requires small business management experience combined with the self-direct apprenticeship can allow applicants to start farming with a microloan. With the microloan program, the experience is minimal. Yeah, you can start with no experience, but like I said, the first production cycle have a mentor on that. And then secured microloans. For an annual operating loan purchase such as purchasing feed, fertilizers, and other crop input costs, these loans are generally secured by crop or products produced. However, equipment and other security can be used. Loans for other purposes such as purchasing equipment or foundation livestock are usually secured by equipment or livestock being purchased, but other types of security can be used. All loans need adequate security. So in other words, whatever you're getting the loan for, if you're wanting to purchase livestock or equipment, we put a lien on that. And then if you're going to do an annual operating loan, which is anything that's perishable within 1 year, we put a lien on the crop. Like if you're growing crop, then we put a lien on your crop. And of course, that loan will only be for 1 year, and that loan has to be paid back in 1 year, as opposed to a term loan, which are like if you're going to purchase livestock, farm equipment, those are termed for 7 years. And applying for a loan, you may obtain the forms for a loan application by visiting your local office or from the FSA website. There's a web address, and your USDA loan officer can provide assistance in completing the FSA form and identify a resource of assistance in your area. You may submit your application by calling for an appointment. Well, right now, at this time, because of the COVID-19, our offices are closed, and we don't have any money to the office, so just call by phone, and we'll send you a loan application through the mail, or we can work by email you the loan application. And in summary, microloan are all direct operating loans with a maximum loan limit of $50,000, and they have a short application process and reduced paperwork. Allow some applicants that do not currently meet the experience and managerial requirements to qualify for self-supplied mentorship. Provide some flexibility in loan security. Assist the agricultural community by creating opportunities to start business. So fill up financial operating needs to beginning niche and the smallest family farm operation. And this is our contact information. Paula Bain and I, we take care of these counties that are listed above. I take care of Apache, Navajo, Gila County, and Paula Bain takes care of Coconino, Mojave, Yavapai County. And our number right now is listed there, 928-524-3214, extension 2. And I believe Paula should be transferring to Coconino County, which is in Flagstaff. But for right now, she's still available here. I don't know if you guys have any questions about this farm loan program. And I think that concludes my presentation.
Does anyone have any questions to add to Harriet's presentation?
No, I don't. It's a good presentation. Very informative.
Okay, thank you for your time, and I appreciate you guys inviting me to do our presentation.
You're welcome, Harriet, and thank you for getting on with us. You had I have, I guess, one question. Your guarantee conservation loan, when you talk about guarantee conservation, I know we have like equip projects out here on the reservation. Would this program be available to where we had like a project that was, say we were given a project that was going to cost like maybe $13,000. are we able to use this guarantee conservation as a loan to make our project happen and be able to work that back to where when we get reimbursed for the completed project, be able to repay it as a loan?
Not necessarily. What that really is a guaranteed conservation program is it goes to the guarantee ag lenders. And what that is if you're going to do a conservation project, that means you're going to be conserving that project or that area, and you get a loan to do some projects for that particular time and period. But what you're referring to is like if an individual is participating in an EQIP project and they want to do a conservation project, which is in a different term than what FSA uses and what you use. You understand what I'm saying? But I guess your interpretation would be if you're doing a conservation project on the reservation, are you able to use these loans? Yes, you can use these loan funds, but it's like applying for a regular loan. So in other words, you're going to have to go through the regular process to apply for a loan, and then you have to pay a credit report fee of $16. You got to have good credit to qualify for these farm loans. And once you qualify and meet all the eligibility requirements, then the loan will be approved. However, it will only be for a 1-year loan, simply because how I know that the EQIP project works like this. For the first year, they'll have so much money that is required to start the project. And when 1 year, you have to have a specified amount of project, and also, I guess, the monies involved has to be completed. Once it's completed, NRCS can pay for the loan. However, there's one other thing that might happen is, let's say that you didn't complete the project, then it's going to be a problem, and how are you going to pay the money back? So those are the things that, those are some issues that we face. But so far, with our county, that hasn't happened, but it has happened with other counties that I know of. And if you're for sure that you're going to fulfill the project and complete it, because I know NRCS has to have that. They have deadlines that you have to meet, and you have to be on top of the project in order for it to be completed. And if you're going to do a loan with us, it can work, and it has worked in the past.
So could you give us maybe like a scenario of what has worked for other people who've done a project?
For example, in Coconino County, what's her name? She did a pipeline project. And what happened on that project is she wanted to do a pipeline project that was like worth $98,000. Anytime that you're going to do a pipeline project that's connected to the land, pipeline or a fencing project, we have to put a lien on the land. In her case, we couldn't do that because it's on Navajo trust lands, and the Navajo tribe will not let us put a lien on the land. So she put up her house in Flagstaff as a lien. Now, we couldn't do that because that's out of the jurisdictions of the tribal lands. So we couldn't do that. However, so this is what she did. She went down on the cost. She only wanted a loan for $15,000 that's just to pay the workers. She could afford that. And how we perfect our lien is we put a lien on her cattle. So then what happens is, once we put a lien on her cattle, she has to file a UCC with the Navajo tribe and for with the Arizona State Land, the Uniform Commercial Code with the Arizona State. So there's fees involved, and once she pays that her loan off, then we release the lien to her. So the only thing about that is, let's say while she's doing her project and she wanted to sell some calves, she takes her calves to the market. And what will happen is they're going to issue a check in her name and Farm Service Agency's name. So if there's 2 pays on the check, and she has to bring it into our office, we sign off on it, and she can cash it. So those are the things that are involved. And then another project that took place was in Blue Gap. A lady, she did a well drilling. how hers worked is she did a well drilling. Again, we couldn't put a lien on the land. So what she did is she only went like $30,000 for the well drilling to pay for the drillers. And of course, we put a lien on her livestock again. That's one way it works. We have to put a lien on your livestock or any farm equipment you have, we put a lien on it. That's how we perfect our lien. Any more questions?
Does that make anyone curious with the question now? No? Yes? Okay. Well, I think that will conclude our presentation today. Thank you, Harriet, for getting on, and we'll certainly call on you again. Our webinars are ongoing, so who we didn't catch today, hopefully we'll be able to hear our presentation on Facebook as well as YouTube. And thanks again for your presentation, Harriet. That concludes our webinar today. Thank you for getting on, everyone.
Thank you.
Mm-hmm.